Hey Palantir investors, listen up. If you're feeling anxious or panicking over the recent dip in Palantir's stock price, I get it, especially if you're new to this market and have been investing in Palantir for the past couple of years. This emotional roller coaster can be overwhelming. But stick with me for the next few minutes, and I'll help you understand the current situation, what's driving these movements, and how you can set yourself up for success. First, let's talk about Palantir's nature as a stock. It's no secret that Palantir experiences extreme highs and lows. It's a sensitive stock. When the broader market declines, Palantir often overreacts and falls even harder. But on the flip side, when the market does well, Palantir can soar, delivering massive returns. Remember, this is the same stock that climbed over 400% in a single year. The lesson here? Don't get overly euphoric when it skyrockets, and don't beat yourself up when it dips. Instead, focus on maintaining emotional discipline and staying grounded in your investment thesis. One thing I emphasize is having a clear plan. For me, that plan revolves around a simple list of reasons why I invested in Palantir in the first place. I recommend every investor make their own list. Here's how it works. Write down why you chose to invest in Palantir. Revisit that list when the stock price drops. Ask yourself, have any of these reasons changed? If the fundamentals are stronger now than when you bought and the price has dropped, that's an opportunity, not a reason to panic. But remember, when the stock drops below a key threshold, 20% below its 12-month high, I double down. For Palantir, that threshold was $64, and once it hit that level, my buying pace increased significantly. Let's break down why I believe Palantir remains a strong long-term investment. Here's my list of reasons. Growth rate. Palantir's growth rate has accelerated from 20% to 30% year over year. That's a significant improvement. Scalability. Despite a 30% revenue growth, operating expenses only increased by 7%, leading to a 900% surge in operating income. This shows how scalable the business is. Low capital expenditures. Palantir generated $2.6 billion in revenue with just $14 million in capital expenditures. That's efficiency at its finest. Strong balance sheet. With $5 billion in cash and only $250 million in debt, Palantir has a 20.1 cash-to-debt ratio. Free cash flow. The company has a 40% free cash flow margin, generating $1 billion in free cash flow from $2.6 billion in revenue. Founder-led. Palantir is led by Alex Karp, one of the top CEOs in the world, ensuring strong leadership. Institutional confidence. Over the past 2 years, institutional ownership has grown from 35% to 50%. Recession-proof. Approximately 50% of Palantir's revenue comes from government contracts, providing stability even in uncertain economic times. AIP monopoly. Palantir's AI platform dominates the market, much like NVIDIA dominates hardware for AI. Sticky client base. Top 20 clients spend nearly $60 million annually, with that number growing each quarter. As long as the core reasons for investing remain intact, short-term price movements are just noise. Palantir has a solid business model, industry dominance, and a bright future. The market may be unpredictable in the short term, but over time, it rewards businesses with strong fundamentals. So, if you're feeling anxious about Palantir's current dip, take a deep breath. Review your investment thesis, consider the long-term outlook, and remember, successful investing requires patience, discipline, and emotional control. Final thoughts. For those of you looking for guidance and deeper insights, feel free to join my academy, where I share strategies, updates, and analysis with a growing community of over 9,000 investors. Together, we navigate the ups and downs of the market with confidence and clarity. Until next time, stay calm, stay focused, and stay the course.